Hello, and welcome to the worst investing channel in all of YouTube's history. And today we are going to be covering and analyzing the one and only Aditya Birla Sun Life Asset Management Company Limited. Big name. This is an asset management company. Basically, you can give this company your money and it can manage that money for you. It can put that money in one of its own mutual funds, in one of its own other funds. So the company has a lot of funds and you can invest your money in these funds and the company will take some fees from you. You can do SIP in one of the funds of Aditya Birla Sun Life AMC Limited, and it will take a bit of fees, performance fees, fees as a percentage of the total money of invested, that is the base fees, transaction fees. It can provide you research, some advice, personalized, customized solutions, personalized portfolio for you or high net worth individual, even for you, and you can give them fees for that. So that's how the company makes money. Today, we're going to be analyzing the company's financials, where it makes its money from, what are its future growth trajectories, what is the company aiming for. So let's start. First of all, market cap 23,119 crore rupees. So pretty big company. Current price of one share is 800 rupees. The book value of one share. What is book value? Assets minus liabilities. So the net assets of the company are book value. So book value one share is 129 rupees. Price to earnings ratio. The stock PE 23.8. Okay. Return on capital employed, ROCE, 35.5%, a really high return on capital employed. Then return on equity, 27%. Again, a really nice return on equity. So high return on capital employed, high return on equity, usually a good sign. Dividend yield is given 3%. So last year, the company paid out a dividend of 24 rupees per share, 24 rupees per share, giving out dividend yield of 3%. Okay. Now let's analyze the company's financials. Here we have the company's profit and loss all the way from 2017 to 2025. 2025 is a bit on the right. Here we have sales. See sales, we have operating profit. Below that, we have the operating profit margin. Then expenses like depreciation, other income. Then we have profit before tax. Finally, we have profit uh, after tax or net profit. Earnings per share is given. I don't know if this figure is accounting for dilution of shares, but maybe it is. It is screener.com. And we have dividend payout ratio. What percentage of net profit is paid out as dividends? We have all these figures. So let's start. For 2017, we have sales of 1,013 crores and operating profit of 344 crores, operating profit margin 34%. 2021, let's go all the way to 2021. We see sales of 1,202 crores and 735 crores in operating profit, 61% operating profit margin. Okay. Then all the way to 2025, we see 1,900 crores, 1,982 crores worth of sales, 1,287 crores of operating profit, a high operating profit margin of 65%. We move to profit before tax, and finally, profit after tax of 931 crores for fiscal year 2025. So, what do we see here? Now, one thing you may notice, okay, 2017 till 2021. Yeah, let's see, 2017, 2021, what do we see? Sales, 20% growth. Not cumulative growth of 20% is pretty bad over the last 5 years. Okay, see, 2017 all the way 2019, what do we see? We see operating profit rising nicely. We actually see sales rising fast too. 2020, 2021, decline in sales. However, notice decline in sales from 2019 to 2021, operating profit has increased. So, operating profit margin has also increased sharply. We move down, we compare the net profits. 447 crores to 526 crores in these declining revenues. So maybe not exactly that bad because the bottom line, the profits actually increased. So that was a bit of a dip. And after that, 2021 onwards, we have seen sales rise, we have seen profits also rise, and profit margins, operating profit margins, 64%. Pretty nice. Pretty nice. So over the last 5 years, the company has seen compounded sales growth of 10%, okay, borderline 10%, last 3 years, 22%, and TTM is last 12 months, trailing 12 months, so 22%. So last year has been good for them, last 12 months. Operating profit, compounded profit growth has been 13% last 5 years, last 3 years, 11%, last 12 months, 17%. So not exactly the fastest of growers, okay? Return on equity, again, really nice. 29% 5 years ago, 3 years ago, 27%, last year around 27%. Pretty stable, if not slight decline. Now we looked at all of this. Let's look at one more thing. Cash flows. Amazing, amazing. These are the cash flows, very important statistic from operating activities. And and Aditya Birla, okay, it doesn't have a lot of debt, right? It doesn't have a lot of debt, so it doesn't have a lot of interest payments, and the company doesn't have heavy assets, not a lot of fixed assets. So its depreciation is going to be very low. So cash flow from operating activities, it's going to be pretty similar to free cash flow. Not exactly, but other components like depreciation, like maintenance capex, and interest are going to be pretty low. So let's just see it. In 2018, we have operating cash flows of 346 crores. Then 2021, 512 crores. 2023, 437 crores, massive dip. Then last 3 years, massive decline. March 2025, we see operating cash flows of 708 crores. So this company is a cash flow positive company and pretty substantial cash flows, 708 crores operating cash flows for a market cap of ooh, 2,300 crores. Hmm. Okay, okay. 700 crores cash flows produced last year. So now, one more thing I want to show before we look into the company, the business model and all that is this. This is ranking of Indian AMCs, asset management companies, by total assets under management. Okay. Let me zoom in. Yes. Okay. And these numbers are in crores of rupees. Okay. All these numbers are in crores of rupees. So as of June 2025, you can see that Aditya Birla Sun Life Management right next to me. Here it is. It is ranked the one, two, three, four, five, sixth largest, I believe. Yes, it is a sixth largest. Okay. Yeah, it is the sixth largest in India in terms of assets under management, sixth largest AMC asset management company in India. So that was the position of this company. Let's look at what the company actually does. Yes, that was a nice transition. So what do we see? We see the total AUM, assets under management of the company. Total AUM is 4,433 billion rupees, which is around 4.4 lakh, 4.43 lakh crore rupees. Yes, 4.43 lakh crore rupees total assets under management. Okay. Out of this, I think I should zoom in. Yes. Out of this AUM, 41% of its total AUM is in mutual funds, which are investing in equity. So mutual funds, which are investing in stocks. And 36% are again in mutual funds, which are investing in debt, like corporate bonds, government debt, government bonds, state bonds, stuff like that. So fixed income debt instruments. Then we have 14% mutual funds liquid. This is also debt instruments, fixed income instruments, from what I understand, this liquid part, but liquid, very short term. So, like treasury bills or very liquid short term debt instruments. And finally, we have alternate assets making up 9% of the total assets under management. Alternate assets, as the name suggests, like real estate, um, private equity, venture capital, stuff like that. High risk, could be high risk. Not saying it will be, there will be low risk and high risk, but alternate assets. So mutual funds dominate. Mutual fund equity is largest, 41%, followed by mutual funds in debt. Okay. So of this, what we see, mutual fund AUM is 4 lakh, 4 lakh crores. Then we see individuals. So individuals investing, that's around 2 lakh crores. Okay. Then we have total alternate investments making up 398 billion rupees. I think that's around 39,000 crores. Now, very important, you see mutual funds AUM, the total AUM, the market share is 6.24%. Okay. Keep this in mind. The market share is 6.24% here, and equity AUM, the mutual equity AUM is 4.19%. So mutual funds investing in only equity. Now keep this figure in mind, okay? Now this is for quarter one fiscal year 2026. This is for quarter four fiscal year 2025. Okay, different number, quarter four. So we're moving a bit back. Market share is 6.3%. Okay, so earlier market share was 6.24. Okay, right now it's 6.24. Earlier it was 6.3%. So market share decreased. Then we moved to quarter three, fiscal year 2023, even more back. Market share was 7.9%. So declined from 7.9%, okay, from quarter three, fiscal 2023, now 6.4% to now 6.2%. Okay, this is from quarter three, fiscal year 2024. So a bit more recent, 7.1% market share. So see, so like all the mutual funds in India, 7.1% were their mutual funds. Aditya Birla Sun Life AMC mutual funds, their mutual funds represented 7.1%, declined to 6 point something percent. Then this is from, where is this from? Even back. This is from quarter one fiscal 2023. Quarter one fiscal 2023. What is this? See? 8.4%. It was 8.4%, declined to 7.9%. And now all the way, we have 6.24%. So this company is one which is losing market share. It's still expanding its revenue, but it's actually losing market share. And it's trying to reverse things. And what the company has said that it's slowing down this, this decline. The least it's doing, that the company is doing, it's slowing down this decline. So it's declining from 8% and 7%, 6% now. It's like 6.3% to 6.24% quarter on quarter. So it's trying to reverse it slowly and slowly trying to improve the situation. So decline is becoming lesser and lesser. It's still there. So total revenue for quarter one fiscal 2026 of 5.7 billion rupees. I don't know how to translate that into crores. Profit before tax, you can see massive profit before tax. Very high profit margin company, very high. Total number of invested portfolios, 10.7 million. Mutual fund distributors. As the name suggests, they help in distributing mutual funds, having more customers connecting and all that. The distribution of this company, basically, distribution of its products. 89,000, 300 plus locations. All right. And you can see the offshore AUM. This is investments offshore. So I guess foreign, all that, 106 billion. Real estate AUM, 5 billion. So investing directly in real estate is 5 billion. Rupees, yes. So moving on. Let's continue. What is this? Scaling retail franchise. This is too big. This is my fault. Yes. Scaling retail franchise. Okay, so first we have equity. QA is quarter average. Just consider this as equity AUM. So assets under management for stocks and all that. 15.5% increase from quarter one fiscal year 2023 to quarter one fiscal 2026, 15.5%. This is an annualized CAGR. This is CAGR, this CAGR, compounded. 15.55% in equity. Okay. Individual, these are not exactly separate. Individual means individuals investing, people investing, 15.7% growth. B30, B30 means investors coming from beyond the top 30 cities. So coming from tier 2 and tier 3 cities, investors from there. You can see 722 billion rupees coming from there, 18.4% growth over the last 3 years. Okay, compounded growth of 18.3% growth. Really, really nice. Hold on, what is this? This is the overall contribution to AUM. So equity contributed around 44%. It's contributing of 44%. And what is the next one? What is the next one? Next one was individuals. Yes, so individual AUM is contributing around 49%. It's increased from 48% to 49%. Equity investments in stocks and all that, funds investing in stocks and all that, increased from 41 to 44%. Okay. And this was beyond 30. So beyond 30, tier 2 and tier 3 city investors. Okay. 15.9% contribution to overall assets to now 17.4%. Very, very nice. Nice, nice, nice. Uh, moving on, we move on. Let's see another thing. SIPs. Okay, focus on growing SIP flows. Okay, so total SIP contribution rose from 10.91 billion rupees to 11.4 billion rupees. New SIP registrations. This fell. Okay, this fell from quarter one fiscal 2025, 839,000, now 583,000. This is in line with the industry. From what I understand, the total industry SIPs also declined. So it's in line with the industry. Then contributing SIP accounts in millions. Ooh, okay. This is registration though. This does not represent a decline, okay? Does not represent a decline in total number of SIPs. It's registrations, new registrations. So how many new people are joining in? So people still join in, okay? Like 5 lakh, 5.8 lakh people still joined in. Then in millions, contributing SIP accounts, 3.86 million from 3.42 million. Okay. Then contribution of total SIPs. So SIPs represent of for more than 5 years. 95% of SIPs are for more than 5 years. Okay. And for over 10 years, 90% of its SIPs are SIPs over 10 years. Okay. SIP is a systematic investment plan. Okay. So fine. We are seeing growth in SIP accounts. Registrations fell down a bit. That's true. And SIP contributions, how much is being invested through SIPs, has increased. That's a positive. Very much a positive. Yes. So Pan India Distribution Network, okay, one of the largest distributor bases, 19,000 plus India PAN codes, 3,000 plus locations, over 80% are in B30, beyond 30, beyond top 30 cities. Okay, 115 digital partners, 89,000 mutual fund distributors, 90 plus banks. Really, really nice. I guess I don't have much to say about this company, to be honest. Then, very important. This is okay. Alternate investments. This has grown exponentially. Now, AIF is alternate investment funds, currently around $287 billion. That's, I think, around 28,000 crores, 28,000 crore rupees. You can see the growth. In just 1 year, this has grown from 34 billion rupees last year to now this quarter, reaching around 287 billion rupees, 751% growth. Massive, 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 massive. Then offshore has actually not increased. Offshore decreased. Very interesting. So offshore decreased, but massive increase in alternate investment funds. Then a lot of new funds were launched, like ABSL India Special Opportunities Fund, Structured Opportunities Fund, ABSL Money Manager. Now, if you're wondering what these things are, I actually was searching in Google what they mean. So what I got. So the ABSL India Special Opportunities Fund, okay, it aims for long-term capital appreciation by investing in special situations like corporate restructuring, changes in government policy regulations, or company facing temporary but unique challenges. It's a high-risk fund, and it has 805 crores in AUM. Okay, fine. Then we have the second fund, the ABSL Structured Opportunities Fund. So it's investing, it provides capital solutions for mid to large corporates, primarily in asset heavy sectors like manufacturing, infrastructure, and industrials. It aims to build a diversified portfolio of 10 to 12 investments targeting mid teen, like 15% internal rate of return. So it's investing in asset heavy companies. So it's trying to buy asset heavy companies. Okay. And it's avoiding over leveraged companies, it's avoiding asset light sectors, and it's avoiding specific industries like gems and okay, jewelry. Interesting. This is an ABSL money manager fund company, the third type of alternate investment fund it introduced. Third in, introduced 29,000 crores of AUM. What does it do? It provides short-term investment options. Okay, it primarily invests in debt instruments, including government securities and low-risk securities with very high credit profile. 22,000 crores. This is the big one. Okay, this is the big one. Okay, 29,000 crores. Big, big, big. Let's go back. I don't have much to say in this segment because all I can do is present. But I guess this is a big focus for the company, this growth. So we did see earlier, we saw market share in mutual funds decreasing, and that can be that is obviously a concern. But I guess this is one of the growth levers of the company. Alternate investment funds rising a lot. Video is already 20 minutes. This is not good. Then building a passive business. These are passive funds. Passive funds, they aim to uh, like replicate the performance of an index fund. So there's already an index fund. Passive fund will try to will aim to replicate the performance, to like match the performance of that fund, kind of. You're not explaining correctly, but it's a passive fund. Basically, asset managers don't have to actively manage the funds. You don't have to choose the stocks coming in, choose the investments coming in. There's already an index which serves as the benchmark. Yes, index fund that serves as the benchmark, and these try to match index fund. It's a passive, does not require a lot of management. So, 364 billion rupees is in this passive AUM. It's grown three times, 36,000 crores in passive funds, grown three times in the last 3 years. Massive growth, three times. FOF is fund of funds. This is a fund which invests in other funds. Okay, other mutual funds, grown three times. Big one, we have index AUM. Okay, this just invests in index funds. I guess maybe the Nifty, um, like stuff like Nifty 50, stuff like BSC Sensex. So it invests in funds like this, index funds like this. Then what we see, investor portfolios, total 12.3 lakhs. Okay, this is the investment portfolios served. Twice X growth since June 2020. It's ranked the number one in debt index. Okay, and 52 props. All right. And finally, what do we see here? Um, we move to the profit and loss statement. Of course, we move to the profit and loss statement. Finally, the quarterly, all these numbers are in millions of rupees. Yes, millions of rupees. So revenue increased from 3,866 million rupees to 4,474 million rupees, representing a growth of, drum roll, 16%. 16%. Okay. Yes. Operating profit rose from 2,097 million rupees to 2,544 million rupees, representing a rise of 21%. Oh, 21% quarter on quarter growth. Profit after tax rose from 2,357 million rupees to 2,771 million rupees, representing a growth of 18%. Okay, so profit after tax latest quarter rose by 18%. Up, pretty nice, very, very nice. You can see, you can just compare like depreciation and amortization to like the total revenue. So it's an extremely small part. It's a non-cash expense also. So yeah, Finally, we move to the balance sheet. The only thing I want to show here was look at the total liabilities. Okay. This is total equity. Okay. These are also in millions of rupees. So 40,100 million rupees are total equity of the company. Equity. Okay. Owed to shareholders. Owed to shareholders. So owed to borrowers, money owed to borrowers is 2008 million plus 2118 million, which is around 4,126 million rupees. Okay. So 4,126 million rupees are the total liabilities of the company. Okay. Borrowed money and all that. Compare this to assets. Assets are actually totaling 44,226 million rupees. So assets of this company are 10 times, literally 10 times liability, more than 10 times liabilities. And majority of these are concentrated in this 37,273 million rupees worth of investments. So that was it. That was Aditya Birla AMC. Not the fastest grower, has been losing market share in, well, the mutual funds market. Still growing, of course. And I guess great cash flows. We saw pretty good cash flows. And what else to say about this company? SIPs are still growing very well in India and are still a very small part. And the mutual fund industry, asset management companies are expected to do very well because there are a lot of tailwinds. You know, more and more people becoming financially aware, investing more in stocks and all that, doing more SIPs. So it has a lot of strong tailwinds along with this in alternate investments, which is also a tailwind, a lot of growth opportunity there. The company has shown some great operating profit margins. We saw earlier 64%, great cash flows we saw earlier, even during that period, 2018, 2021, or 27, 2019, 2021, where we saw revenue decline, we still saw profits increase and profit margins increase. So that's maybe a plus, even though revenue declined, profits overall actually increased. The total profit increased. So that's a good thing. And that's finally it. Maybe it's not the fastest grower. Maybe the sector tailwinds themselves can drive the growth. But let's see where does Aditya Birla Sun Life AMC or Limited goes from here. This was and is the first channel on YouTube for investing. So have a nice day.